This is Charlie giving you Wednesday's video this week, and I've titled this video "Take Everything Off." Um, I'm not talking about naked trading here. I'm talking about off your charts. And so let's actually look at. What I've done is I've taken everything off, all moving averages, any other stuff that might be on the screen. And sometimes it's really good just to remind yourself of looking at a chart without anything else on it other than the prices, and then maybe some support and resistance. So for example, I've taken a basic chart here, a plain chart of the euro dollar, and all I'm going to do is go through a process of just putting some support and resistance. This is on a daily chart here, and I'm just duplicating these lines, and I can actually put some more on. Oh great, that one's already putting on for me there. Because okay, let's drag this one across. Let's find some other level. That was a nice level from back there, and so on and so forth. So just a reminder sometimes, just to put it all into perspective, because we can get caught up in price action along with whatever indicators we might have at the bottom end of our chart or whatever, and that's all fine, and I use indicators, but you need to have your eyes trained for a basic chart for the price action as well. And what I find is a lot of traders, their eyes are trained at their indicators rather than at the price action first and foremost. Indicators are supporting evidence, shall we say, as I always use it as the analogy. But just by taking everything off, it sort of focuses your mind back on the basics of trading, support, resistance, and all of that sort of stuff. So if I'm now looking at this chart here, I can see that on the euro dollar, I've got highs up here and I've got lows down here. And obviously there's going to be other support and resistance zones within this this range, but I've just picked out some key major levels at the moment, and then some other levels down here. And bear in mind, I'm only looking at a daily chart at this point, and another level down here. So if the euro dollar, for example, was to break down and it was to break through this level, the basics dictate that, and again, this is not necessarily 100% accurate, but I've put it across these hits along here, so it's about right. That if it breaks down here, then of course the next levels, looking at support and resistance, could be back down to what was an old high here, because this hasn't been tested since breaking out. It hasn't been tested, and sometimes just putting on levels like that is really useful. So if we go to another chart, let's go to the dollar yen. I've already got a line really already, so I can put a level right down at the absolute low there, but let's not bother with that. Let's actually cut through all of this. There we go. So we've got a level there, and then let's do some duplicates and put some more. So we've got a nice level about there where we've just hit a high dating back from this, roughly this close over here and this spike low over here. So if I drag that back, you can see this spike low there. And again, I could carry on putting on some more lines onto a chart, which just sometimes just refocuses us on where are we at, where's all the support and resistance. I've drawn this one across this high and this low over here. Where are all the support and resistance levels? Obviously there's a minor one over here, this support, minor support, just where it made that low there, but and where's this price action at the moment, and where is it relative to everything? Because when you do get breakouts of horizontal support or breakdowns breakouts of resistance or breakdowns of support, then you can always look for pullbacks to those levels where price may then decide to then do a retracement before it goes higher or lower again. Like this one back here, it came down to a support level, or it created a support level here, but it was already back from over here, bounced, then it broke through. So when it came back up to that, it's a classic sort of technical level there when it came back to retest this prior lows over here, sort of thing. So it's that sort of stuff that just refocuses the mind when it comes to trading, rather than just having everything on your chart. Sometimes just having a nice plain basic chart, and then put some support and resistance, some trend lines on, you can do, and actually it helps you with your overall analysis, because I could come out to weekly charts here as well and make sure if there's nothing else that I need to know. Looking at the weekly charts, I've got a trend line going all the way across here, so that's obviously very valid, that trend line there. And before you know it, before you start putting all your indicators on, you can just look at a raw chart like that and say, oh, okay, this is what I'm seeing here based on this raw chart. Where are we? Where are we relative to support and resistance? Are we breaking out? Are we breaking down? Or are we just sitting within two levels at the moment? So for example, the dollar yen at the moment is within these two levels. Obviously it's been coming up over the last few weeks, but it's hit a level up here. It's had a reaction to that, so it's back within this, or I say back within, but it's within this range here. So we know it's at the top, it's in the upper part of this range within these two horizontal levels I've got here. So it would be a case of, well, if it broke up and then did a pullback, that might be a long opportunity. But if it just carries on coming down here, then where could it come to? It could come down as low as here. And back to the euro dollar, and like I've already said, it's slap bang within this overall choppy range here at the moment. And we could do this and apply it to any number of charts. I could, for example, put gold on, for example, here, and say, right, okay, where's them highs? So if I put a trend line on, it'd be useful if I actually have it in the right color, not white, because it's not showing up on white. There we go. So put a trend line up, a horizontal resistance zone. Actually pull that down a bit. That's not quite right, because actually it's there, because that marries up with this high back here as well, you see. So we can see that gold's had several attempts at this zone here, just a little bit below 1360. I still haven't quite got that on right. There we go. So just a little bit below 1360. And so don't worry about spikes. You want to be looking at where you're getting the most hits, generally speaking. So we know that that's an important level for gold. So if gold was to break out and close, obviously it's tried it just last week, but if it was to get up there and close above this horizontal line, that could be highly bullish, as long as it can get a couple of closes up there. And then if it did a retest to that line, that would be a buy zone. You know, it's all that sort of stuff. And I could very quickly put some trend lines on as well, and obviously some other support lines down here as well. And it just helps you with getting your overall read of the market, just to take everything off and look at the basics of a chart. So there you go. That's my midweek update for this week, just as a little reminder to not forget what we're in this all about, and the technical analysis, and just what we're actually trading is price. What we're actually trading is mass psychology, really. It's just everybody around the world is buying and selling. And where is that most represented? It's in price. Even volume is is delayed in a way, and you can look at past volume levels, of course, but past volume levels can get trumped by current volume levels. So again, the number one indicator, as everybody says, is price itself. Nice and clean chart. Put price on, put some support and resistance on, because those highs are highs for a reason. People have sold up there. Either they've sold for one of two reasons. They've either banked profits or they've sold short, and that's creating those levels. And the same off of lows as well. People have been buying down there for whatever reason. That's one thing that's not disappearing: support and resistance. People are buying, people are selling at those levels. And when we get breaks of those levels, and then it tells us that something else is happening, and that maybe we then go on to the next level. And why do prices go to the next levels? Because price likes to go to where orders are, and orders tend to congregate around our old highs, and prior lows, and that's what the markets tend to move towards. Hopefully that's some use this week. I shall be back in touch on Friday for live trading.